Welcome to the Contrarian Capitalist podcast. I'm delighted to be joined today by Jesse Day, host of Commodity Culture and VRIC Media. Jesse, welcome to the show.
Very happy to be here and excited to dive in today and very much appreciate the opportunity.
It's great to have you here, and it's always interesting to get podcast and YouTube channel hosts the other side of a microphone. So I imagine that experience must be different for you as well. And before we rattle off, I better date stamp this because obviously there's a lot going on. So we're recording this on Tuesday, the 14th of October. This will be out on Thursday, the 16th. So my apologies in advance if there are significant changes in any price points that we discuss today. Jesse, I know we're going to speak probably quite a lot about uranium because that's your all of this is an area of your expertise. But I know you said that uranium's the number one if there was one. But we'd probably better start with gold and silver. We're seeing a lot of excitement in the market. My personal opinion is possibly a bit too frothy. In fact, we've just seen the silver price top overnight. I think it was up over 55 and it's down about 51. Uh, a lot of excitement over there. You interview a lot of people with a lot of expertise, but what are your thoughts and opinions on where we are in start with gold and then go on to silver?
Yeah, I think there's certainly some validity to the concern that we're overbought here because if we look through technical indicators such as RSI, I know gold is very overbought as well as the miners, silver as well. So there are people that have some concerns, rightly so. I think that the fundamental factors driving both metals in some ways trump those sorts of technical indicators. So of course, I do expect pullbacks as we've seen today. Silver is pulling back, I believe over 3% so far, still above $50 on the spot market. Gold continuing to rise. It's been incredible to watch, particularly. So I want to start with silver because silver is a metal that I've gotten a ton of pushback over in interviews I've done with people on the silver market back when it was between 30 and 35. People were talking about $50 silver a lot. That was the big round number that people like to point to. And just the amount of comments and hate that I got or that my guests got over the fact that silver is such a manipulated market. There's absolutely no way we're going to $50. It's useless, worst investment I ever made, on and on. I mean, it's interesting that the people who hate silver tend to gravitate towards silver YouTube videos. I wonder if they've sold their stack and are hoping for it to fall. I'm not sure exactly what's going on there, what the psychology of that is, but it's very strong. And here we are above $50 an ounce. Now, obviously, adjusted for inflation, we're looking at over $200 silver if we're using official government inflation statistics to get back to the 1980 high. And if we're more realistic in terms of the effects of inflation, it's going to be much higher than that. So triple digit silver really is the all-time high in real terms. And I think we could get there within next year, before the end of next year, at the pace that things are going now. And just given, look, there's obviously a lot of hyperbole. And even now with silver above $50 an ounce, we're seeing a lot of some of it's rumors, some of it potentially confirmed. It's hard to tell on social media, but a lot of silver shortage stories. Oh, the Royal Mint in the UK is now supposedly restricting both silver and gold Britannia sales. Now, what's the reasoning behind that? Of course, it's going to be spun on social media to be, oh, there's a shortage, but we don't actually really know the full story. There's some wholesale retailers of silver in China that are said to be stopping sales now. In Japan, it's been very difficult to get silver for quite some time now. I know that for a fact, but we are now seeing reports. It's been going on for months. The inability to buy silver easily from bullion dealers in Japan, but we're now seeing reports on social media that some of the retailers are just flat out of silver. They're no longer offering silver products. So these are all very interesting anecdotes to be paying attention to. Of course, there's a whole LBMA and COMEX rabbit hole, which I'm not qualified to get into, but a lot of people I talk to, like Ed Steer, Andy Schekman, etc., have a really interesting take in terms of inventory levels, in terms of short positions by large bullion banks. And we are now seeing potentially those short positions unwinding because of the fact that at some point, the reality of the shortage of physical silver the paper market has to come to terms with that at some point. We hear all sorts of numbers when it comes to how many paper contracts there are versus actual ounces of physical silver. Some of those numbers have a very large gap in between them. And so that game only works as long as it does until it all unwinds. So I think we could be seeing some of that now, which could push the price a lot higher. The industrial demand for silver is a very interesting aspect because silver stackers tend to look at silver as money, just like gold. But obviously, there's a very, very large industrial component to silver. So, how much of this spike in the price is being driven by industrial versus monetary? That's a very interesting question that I don't have an answer to, but I think it's something worth considering. Switching over to gold, obviously, the story there is monetary debasement worldwide, the debasement of the US dollar and all fiat currencies. It's an interesting, the viewers who are watching this and people who exist in this space know very well that since gold backing was removed from the US dollar in 71, that we've been living in a global fiat currency experiment. This is the only time I'm aware of in recorded human history where the entire world is using paper currency that's not backed by anything but trust in the governments that issue it. So that game has to come to an end at some point. And although there's a lot of dramatic calls all the time over the years, you could go back decade plus and you'll find people saying the system's ready to collapse because of this whole fiat Ponzi scheme. The game can obviously go on a lot longer than people think it can. I think we've seen that already. But I am starting to think that gold's parabolic rise is reflecting that underlying debasement. And, interestingly, if we look at the broad stock market, which continues to move to all-time highs, if you price it in gold, it's a completely different picture. It's basically down over the last decade or so, I believe. Or it might not be a decade, but as we get closer to where we are today, if you track the S&P, for instance, in gold, it's actually down. So that's telling us something. Gold is the barometer. Gold is the truth teller in the sense of global financial assets. And so I think it could be sending a warning signal that the whole scheme that's being cooked up is now coming to an end, which is interesting, but also scary in a way because the great fear is some type of hyperinflationary event that spreads worldwide because we've seen many isolated incidents of hyperinflation, but we have never seen a global hyperinflation of all currencies at once. So I think it's tough to say if that's a realistic proposition, at least in the short term, but I think it should be on people's radars. And that's, I think, one of the main reasons to own physical gold and silver to protect yourself against such an outcome. Because in that scenario, there's going to be food shortages. It's going to be difficult to obtain anything of value. You're going to see massive civil unrest. So, stocking food and these sorts of things that preppers get accused of being extreme for, I think is something that people should consider as well. But in terms of the price action for gold, I see a continued rise. I certainly see pullbacks along the way. I think the inflating government debt and deficits, as well as off balance sheet entitlement spending, pensions, which is the sacred cow of the political class around the world. Because if you let the pension system fail, your entire almost reason for existing is gone, and it's very difficult to maintain your hold on power. And with all of these politicians at the elite level that have entrenched themselves in positions of power, they will die before they give it up. And so they will do whatever they can to hold up that pension system. That's a big reason why I think you're seeing a lot of immigration in various countries is to add new labor to the workforce that's paying into the pension system. And I think that's why you're seeing more money printing, rising government deficits. Not only do they want to ensure that they can pay pensions to all their citizens so they can keep their game going, they also want to receive their own pensions. So it's a very interesting time that we live in, but I think gold is going to continue to be a beneficiary of all these events I've outlined.
I think also it's highly possible that the Federal Reserve are going to add fuel to the fire, so to speak, at the end of October. It's widely circulating. It's going to be another 25 basis points cut, which again doesn't make any sense to me. I'm in the Peter Schiff camp of those rates should be much higher. So things like that, and maybe the Bank of England do the same, the European Central Bank. So that's another thing as well that they are probably going to cut into an inflationary environment, which is just going to, stimulate that inflation even further, no?
Absolutely. It's very interesting as well to see the political battle going on between the president in the United States and the Fed chair. How much of these rate cuts are due to that political pressure because we really don't know what's happening behind the scenes. So that's an interesting point to note. I mean, why does Trump want lower rates? Well, one of the main reasons is because the higher rates go, the more expensive the debt is for the government to service, obviously. So that's a big reason behind that. He also wants the stock market to continue to rise because whether this is based in fact or not, him and the people around him see the health of the stock market equal to the health of the economy, which doesn't actually, that's not a correct corroboration, but nonetheless, it's one that he likes to point to. Look, the stock market's strong, and that's a way that he scores political points. So there's that aspect as well. And yes, you're right. In terms of rate cutting cycles, I believe around the world right now, there are no central banks raising rates as far as I'm aware at this point in time. There might be a few, but it would be on the fringes. The vast majority are cutting rates. And yes, in the face of rising inflation, I think that can definitely provide more rocket fuel for the gold price too.
Just going back to silver, and I know that you mentioned briefly there LBMA comics, and obviously we're not going to go into that because, like you said, we'll make ourselves we'll do ourselves a disservice. I think if we start going into that, there are experts out there that can hit the nail on the head with that. But I find it interesting that you mentioned about what we read online about what is true and what is not true. So for people out there, and most people are going to be au fait with silver and gold, I get that, but as you said, there is a lot of information out there. How would someone go about distinguishing what is true and what is not true with regards to are there silver shortages or what's going on here? How would someone start by doing that? What would they look for?
Well, look at the source of the information and ask yourself if they have anything to gain from what they're posting. I think that would be about the first thing that I would look at. Are they selling gold or silver? You know, it's funny because my channel is sponsored by a gold and silver dealer. So, of course, I get comments, of course, this guy's pushing gold and silver because he's selling it or whatever, which I get it. That makes sense. So when I have people like Andy Scheckman on the show, who is literally a gold and silver dealer, that's his main role. So of course he's going to say silver's going to 100, gold's going to 10,000 or whatever. So I get that people believe that bias. So you have to realize that that bias is going to exist and then collect several sources of the same information. I always check online to see if there's any articles posted. Now, the mainstream media is getting less and less trustworthy, so it's not like if Bloomberg or Reuters post something, it means, okay, it must be true. But at least to be able to find something written online to back it up, because I've seen so many posts, not only when it comes to gold and silver, but several other things on X, where somebody will just announce something with no link or no sources is becoming so common now, and everybody just retweets it without question. I've seen people that I greatly respect and have spoken with and who are brilliant retweeting nonsense where I'm like, I look it up and there's no information to support this, or it's from like 5 years ago. That happens very often. Two people will post a video and say, oh my God, look at this. And everyone's like, what's happening? And then you find out this video is from 5 years ago. So they're just bringing up old controversy and presenting it as something new. So there's all these sorts of signs to look out for. So I would cross-reference online and then, whether it's through a Google search or other search engine to see if there's any actual articles written about it and see if the person has linked to source. If they haven't, that's already a little bit shady. Sometimes they'll link it in like a comment as opposed to the original post. So I would look out for that and just cross-referencing with several different sources to see if other people are saying it as well, because everybody's got an instinct to retweet and comment on something. And sometimes that's not the best move because then you end up spreading this information that might not be correct. But I would urge caution that especially now, as we start to see gold and silver both hit new all-time highs, that there's going to be more of that kind of hyperbolic or taking a fact that is true and putting one's own spin on it, but making that spin sound like it's actually an official narrative. You'll see more and more of that. So try to find just the logic and the facts and remove the poster's opinion from the tweet to kind of come to your own conclusions.
Well, thank you for sharing that. And I was speaking to Daniela Cambone the other day, and we keep coming back to this, what I think is the most important five-letter word in this space, and that's trust. And I think that once you've got that trust, which can be difficult to attain in all walks of life, but once you've got that trust, as in, let's have a look at, for example, commodity culture. I trust Jesse, I trust that channel, same with the Contrarian Capitalist. Once you get that trust, obviously it's important to keep that trust without a shadow of a doubt. So I do think that's arguably the most important five-letter word in this space, especially for people that are trying to decipher between, the good and the bad.
Absolutely. And I would say don't trust my show because my guests, you know, it's up to my guests what they say and your
Mm.
guests as well. And I disagree with a ton of my guests on things that they say, or I find what they're saying not plausible. I'm not, sometimes I get pushback because I don't push back against my guests very often. I feel like my role is to let them make their case. I'll ask a few questions. If maybe I don't agree with them, I won't directly debate them, but I'll kind of try to poke holes in their theory a little bit. But ultimately, I leave it to the viewer to then decide what their thoughts are on what's being said and to do their own research down the line. Unfortunately, we live in an era, and it's kind of always been like this, I suppose, where humans are looking for a quick fix, a way to suddenly make money. I mean, it's all throughout recorded human history. There's a very interesting book called Extraordinary Delusions and the Madness of Crowds. It's written in like 1874, I believe, by a guy named Charles Mackay. It's this tome. It looks like a school textbook. It's like this thick and this tall. And it's just a history of humanity's stupidity pre 1874. And just, it's incredible. It's absolutely incredible to read. And reading it is shocking and at the same time comforting in a way because you realize, wow, okay, humanity just hasn't changed. Now it's just being brought to the online world in a way that is more, that all the stupidity is more visible. So you get a lot of people expecting that they should watch a show or follow somebody and they should just be able to copy what they say or buy into what they say or buy into the companies that they're talking about without doing any of their own research and that somehow they're going to become rich or whatever. So part of the onus is on the viewers as well as the producers of content to decide for themselves what is real and what is not based on their own framework. That's the other thing. Most people haven't even built a framework, a lens through which they view investing or through which they view the commodities market.
Mhm.
Many of them don't even know what a PE ratio is, and they're excited about gold. So, what gold stock should I buy? Well, first you should like read some books by Howard Marks and Warren Buffett and go from the beginning. What is a company? What is a price to earnings ratio? Blah. Like, learn all of these basics first, and then you can better understand. It's like early in my journey, one person in particular, Tavi Costa, when I would watch his interviews, I would just get completely lost because he's very technical. He goes into a lot of detail. He really knows what he's talking about. But that triggered me to go, you know what? I should probably be backing up before I start consuming this content and first trying to understand how financial markets work, um, and how to evaluate a company in basic terms before I start trying to grasp, these more advanced concepts. So I think that's important to keep in mind as well.
I know from my point of view, if someone is saying a bunch of things I'm not entirely sure about, I just go into article writing mode. So I'll research it. Let's get layman's going. What is the LBMA, for example? What is the SGE that people are talking about? So, okay, well let's research this. Let's put it into simple terms, and hopefully then that goes out and helps. Jesse, talking about investment, and I should say that for what we're just about to discuss, we are not financial investors. This is not financial advice at all. But I think you've hit on a really important point about planning. So when you're getting into whether it's gold and silver miners or as we're just about to talk about uranium, people can have a look at the long-term vision and go, right, okay, well, what's AI going to do? What's this going to do? But when it comes to stocks and so forth, I think people get a bit confused because they don't have that plan. When am I going to sell? Am I going to sell when uranium hits this price, or am I going to sell when this company 10x's? Things like that. And if you don't mind going into it, I know that you recently tweeted about removing an initial starting position in a company. So if you can, again, go into what's your plan with this? Why did you do that? And again, as I said, this isn't financial advice. This is just dipping into your strategy, if that's okay.
Yeah, absolutely. I actually post 100% of all the trades I make on X along with my reasoning behind them. So somebody accused me, oh, you're just bragging or whatever that you were able to take profits. No, I've posted losses before too. I posted all about my sale of Global Atomic at a 65% loss and the reasons why I was deciding to sell. So it's not about declaring winners, but rather just being transparent in everything I'm doing so people understand I'm actually in this industry and I'm actually an active I'm more of a passive investor than an active trader, but at least I want to be transparent with everything I'm doing, so people understand in some degree I'm walking the walk. But yeah, that position was energy fuels. It's been ripping lately. I believe it's up massively today as well as we're speaking. Yeah, 15%. So in hindsight, some might say that was not the best move, but we cannot time the markets, and I had already made a 3x on that position. And a lot of what is driving the energy fuels price right now is the news headlines about the trade war between the US and China surrounding rare earths. Energy Fuels produces both, well, it's actually producing uranium now. I believe it started to produce rare earths. It has a number of rare earths projects around the world and is mining uranium in the United States right now, but in a very small quantity. So, in a sense, it's a dual commodity company, which is very interesting and one of the reasons I initially started investing in it. And now it's suddenly taken off. And I should note that that three bagger happened incredibly quickly. I went from being down 20% to suddenly being up 200% in, geez, it was like a month or something like that. So I thought, okay, this run has been rather fast, and I can see that it's clearly being driven by the rare earths angle and these news headlines regarding China restricting rare earth exports, which is very real. And it's absolutely true that the US needs to ramp up rare earth production. So I think a huge part of that price increase was, or maybe not a huge amount, but a large amount of it was based around anticipation that the US government could take a stake in energy fuels like they already have done with Lithium Americas. And with Intel. So people are saying, okay, that this could be the next company because the US has also been talking about investing in uranium, and they've actually already purchased uranium from a few different companies, Energy Fuels being one of them. I believe it was in 2024, might have been the end of 2023, for a strategic uranium reserve. And now the Department of Energy is tweeting about, we have all the uranium, we're going to ramp up our nuclear. So I think people are looking at this as, okay, well, this company's got rare earths and uranium, so no brainer, maybe the US will invest in them, the government. The thing is that Energy Fuels is producing such a small amount of uranium at present that it just doesn't move the needle. And yes, they will and can eventually ramp up, but this isn't something you can snap your fingers and do tomorrow. On rare earths, they've just started to produce different types of rare earth elements. They're not fully online there either. So it would make much more sense on the rare earth side. I believe there's a few producing rare earth companies. I think the US government might have actually talked about taking a stake in a pure rare earth company that's actually producing. If my memory serves me correctly, this is very recently. As you were saying at the top of the show, things are moving so quickly here with regards to commodities markets and geopolitical events. But I think it's perfectly reasonable that the government could take a stake in Energy Fuels. But I'd already made 3x in short order. And why not just take my initial investment off the table and play with the house's money? So if it goes up way more, I'm happy. If it goes down, I guess I feel kind of smart. But the whole, like, it's ripping right now, so perhaps I don't feel smart. But one of my favorite investing quotes of all time come from Howard Marks, where he says, "Good decisions lead to bad outcomes, and bad decisions lead to good outcomes all the time in investing." So it's being able to recognize sometimes, like, for instance, I sold Global Atomic, which is a uranium developer in Niger. There was a coup there that happened. At first, I held on. The share price dropped. It then recovered. And it looked fairly promising that, okay, the new government was going to be accommodative and they want to get this project online, so it's going to move forward. But then the government started doing other shady things. Orano, which is one of the world's largest uranium companies out of France, has had operations in Niger for a very long time. And then they had members of the government on the board. And so the new government that came on took board spots, and they started basically saying certain things in board meetings and then doing the opposite outside of the board meeting. So it became a very shady situation where it looked like they were trying to push Urano out of the country. And so that's when I sold because at that moment, even though the share price had dropped, it had recovered, it has dropped again. I wasn't going to try to wait for another recovery because that behavior, they then subsequently went on to nationalize an Australian gold miner, I believe, in the country. So that type of behavior is how can you trust that this government is going to follow through? Not only that, but as these events multiply, the shady action by the Niger government, it's very difficult to procure funding for your project without issuing more shares and massively diluting, which is what Global Atomic has done on a couple of occasions since the coup. And it looks like they may have to continue doing because what financial institution, especially in times like these, is going to commit to a project in a country that's experienced a military coup where the government is acting, out of sorts. So that's kind of the opposite example as with energy fuels. Now, that could have ended up going back to the Howard Marks quote that Global Atomic could have ended up recovering and ripping and 5xing, and I would be like, well, that wasn't smart. But actually, I believe based on the information I had in front of me at the time that that was a good decision. It could have led to a so quote unquote bad outcome. Now, it turns out the stock dropped dramatically more since then. So I would have lost much more money. So the good decision from my perspective turned into a good outcome. So the same can occur with energy fuels. Now, this is also why I took my initial investment only off the table, because I think if we're looking at a 3 to 5 year time horizon, which is generally the way that I look at things, I think energy fuels will be much higher than it is today. So I certainly believe in the long-term trajectory of that company. I just think at the moment it's very overbought and its current valuation relies too heavily on projected potential future earnings. And this is not projected future earnings using like discounted cash flow models. This is like projected future earnings based on maybe the government's going to buy it.
Mm.
Maybe suddenly we'll need to ramp up their rare earth production. More, not more. I guess that would be a quantitative versus qualitative outlook. So it's not based on any NDCF models. So from my perspective, why not take the initial investment off the table? Maybe it keeps going up, in which case I'm happy because I still own a lot of stock. And maybe it drops to a point where I want to buy more. So that's kind of how I look at risk management in terms of getting out of positions.
Well, thanks for explaining that. And I know that ultimately everyone needs to have their own plan and their own ideas. I know that an example from my end was Sibanye Stillwater. I just happened to be looking at the chart in, I think it was February or March, and it was down about $3.50, $4. And I looked at it and I just said to myself, that doesn't make sense. So I bought it. Obviously, it's done very well since then, so I'm happy with that. So I've been also asking myself the same question. Like, at some point, do I want to take my initial off the table? Or I know that I got in so damn cheap when no one else was looking. I'm only talking a couple of $100, nothing major. I'm not talking thousands of thousands. But I look at that and go, I need to work on my plan as well. So, yeah, thank you for sharing that. Jesse, whilst we're on the subject of uranium, though, and I think it's important for people to understand this, the fundamentals of uranium. I know that there's a lot going on in the space and there's a lot of potential there. But given your expertise and what you do on a day-to-day basis, what are the fundamentals of uranium and where is this likely heading? And also, I guess, what time frames do you have? Because everyone's time frames seem to be different.
Yeah, so the uranium thesis is pretty simple. There's a supply deficit. There has been since around 2018. It's projected that reactors will consume about 195 million pounds this year, and there will only be about 150 to 155 million pounds produced. The industry has been working through inventory overhangs post Fukushima when the world shut their nuclear down, Japan shut its nuclear down, and there ended up being a lot of uranium inventory. There was prior to that the megatons to megawatts program, where Russia denuked and ended up using that material to then make uranium for nuclear reactors. All of those spare pounds have basically been burned through already. And we're now also seeing vehicles like the Sprott Physical Uranium Trust, which is an ETF that buys physical pounds and takes them off of the market. And so when you invest in it, you can invest directly in physical uranium. They store it in warehouses. That has been taking a lot of pounds off of the market. Yellowcake PLC is another physical vehicle that also buys pounds. They're listed on the London Stock Exchange. So you have some of those factors outside of just the demand from reactors. And then you have a bevy of production woes when it comes to even the biggest producers. So Kazatomprom in Kazakhstan is the world's largest producer. On an average year, they produce approximately one third of the entire world's uranium supply. They had cut production guidance for this year. They are now cutting production guidance for next year. They've been experiencing issues with a shortage of sulfuric acid, which is needed for their in situ recovery mining operations. I believe they're building a sulfuric acid plant as one of the ways to combat this. But nonetheless, they're facing big issues. And one of the bear cases for uranium has always been, well, when the price gets to a certain amount, Kazatomprom can just ramp up production because they produce so much uranium, they've got so much in the ground that they don't care if other companies lose out on profit. They'll flood the market because, well, they're a state-owned enterprise for one, which makes them a little different than a purely privately owned but publicly traded company. Uh, so that's one issue. Cameco is now talking, which is probably the second largest producer in the world that's publicly traded. They are talking about having to buy uranium on the spot market to fulfill long-term contracts, which also means that their production is not meeting the levels needed for the demand they're getting from utilities. We are seeing a number of projects that are attempting to either re-enter production or start production face issues. Boss Energy in Australia, Encore Energy in the United States. There's several others. One of the biggest challenges facing the industry right now, outside of all these factors that I've mentioned, is the lack of qualified personnel. There's very few young people who've trained to work in the mining sector, and particularly in the uranium mining sector. And so a lot of companies are having very serious issues finding people who are qualified to work at these mines. And they're having to try to call people back out of retirement to come work because that's how difficult it is to actually find new people to get the manpower. So these are a number of issues facing the industry. One thing I will say off the bat about the price of uranium is that one of the reasons the industry is so difficult to understand is because the pricing mechanisms are broken. So there is a spot price, which most people watch because the spot price is the most frequently updated. But there's no futures market. There is a futures market, but it's essentially broken. It doesn't work. So you can kind of write it off. I've spoken Michael Oliver, one guy I interview, who I'm sure you're aware of too. He uses the uranium futures market in his own technical analysis. Hey, maybe that works for him. In my opinion, it's not even worth looking at. So essentially, we have a spot market, we have a long-term contracting price. The spot market is very thinly traded. It's very illiquid. It's often just a handful of traders flipping pounds back and forth to make small profit margins on large volumes. And so that's not a very accurate barometer of the actual value because that's the majority. And when we look at the world uranium market, on a good year, the spot market might account for 20% of total transacted volumes on a good year, and 80%, maybe it'd be more like 10 to 15 on an average year. And then the rest is long-term contracts. But yet the spot price is what everybody watches. So in a strange way, it is actually meaningful. So it shouldn't be meaningful, but because it drives investor sentiment so much, it becomes meaningful. So that's the first confusing thing that makes the pricing mechanisms of the market broken. The second is the long-term contracting. A huge, if not the majority of the long-term contracts signed have non-disclosure agreements attached to them, meaning that the price of these contracts is often not revealed or is stated more vaguely and not specifically. So there is a spot price, there is a term price, but both are kind of not reflective of the true value of uranium. And at the moment, there's no way to discover that. So that makes it very confusing and turns a lot of people away, and rightly so. But I think it's very important that people investing in the sector understand how the pricing mechanism works. So yes, you should be following the spot price, and yes, you should be following what is stated as a long-term price, but don't get too wrapped up in them as accurate barometers of the value of uranium. So I'll leave you with that. And if you have any follow-ups, let me know.
In terms of the other underlying fundamentals. And I appreciate you going, into the weeds, so to speak, with spot futures, contracting, pricing, and so forth. So thank you for doing that. But I also think that if people get concerned by the price or they get concerned by these dynamics, then they should always remind themselves of the overall bigger picture. So what's uranium used for? What's happening with regards to AI and energy, so forth. So if you can, Jesse, go into that. Go into those factors just so people could put their minds at ease if they're getting confused by the pricing mechanisms.
Yeah, so one thing to note is that obviously there's been a 180 turn when it comes to the political view on nuclear energy. It's gone from being reviled to being praised as the only solution to climate change, whether you believe in that or not. The political elite are pushing that agenda, so it does play into it. It's carbon free. It's the most efficient form of baseload power generation known to humanity. So there's nothing better. Um, and so there's build outs happening around the world right now. China alone is planning 150 nuclear reactors by 2035, which is insane. Russia's building, the UAE, India. The US is now trying to accelerate their nuclear build out. It's notoriously over-regulated, the industry in the US, which is one thing that the Trump administration is trying to change. So hopefully, if they can get some of the red tape removed, we're going to see a faster nuclear build out in the United States as well. All across the EU, nuclear is being officially recognized in the green energy taxonomy. So it's qualified for funding from the European Union, and it's now considered a green, clean form of energy by everyone except for Germany and Austria for some reason. I believe that it's because the politicians in those countries are, well, all around the world they are, but perhaps particularly so in those two countries. When it comes to solar and wind projects being built out, pockets are getting greased and they don't want that gravy train to end. So they're lashing out. And, Austria recently tried to stop or contested the nuclear being included in green energy taxonomy. They were ruled against them. And so now they're going to the EU High Court. It's all a bunch of nonsense. But the fact is that nuclear energy is now proliferating all over the globe. We are in the new nuclear renaissance. And not only is this a fact because of, the green energy push, but it's also a fact because of the amount of countries that were developing and still are developing that have more citizens moving into more of a middle class, upper lower class type of situation. Living in the Western world, we often forget that tons of the world doesn't even have access to electricity. And if they do, they often don't have, look at a country like India with insane heat. I think the majority of the country doesn't even have air conditioning, and they're in 50 plus degree weather, right? So that's kind of a no-brainer, and that's one thing that's projected to drive a ton of energy demand moving forward. And this is something that's going to happen across the developing world. Refrigeration, computers, all of these types of things are the lifestyle that we enjoy in the West. Those people want to enjoy too, and they are starting to be able to, and that's going to require an incredible amount of energy. And it already is driving energy demand, energy of all kinds. So nuclear is certainly going to fit into that mix as well. So, I mean, the demand for energy worldwide is projected to increase, and nuclear is the safest. First of all, it's the safest form of energy in the world. Depending on what statistics you look at, it's even safer than wind energy because a few people will like fall off a wind turbine when they're building it and die. So nuclear is actually much safer than every other form of energy that is baseload or intermittent that's not renewable, such as natural gas, anything hydrocarbon based, hydro, you name it. Nuclear is superior from a safety standpoint, and it's the most efficient. And in the long run, it's also the most cost effective. So, and also, the waste that it produces is so easily dealt with and so small compared to the amount of energy that it produces. And there's a whole industry around dealing with nuclear waste or spent nuclear fuel. The problem's being solved. I still see comments online. I have a documentary on uranium that I did, and I still get comments to this day. Well, if they could just get rid of the nuclear waste, then it would be a good idea. They have. That's already 100% solved. I did a whole documentary on just that topic for Sprott Asset Management. Per Janders, who works for Sprott and is involved in the Sprott Physical Uranium Trust, That guy's on top of things. So I suggest people follow him if they're concerned about the waste issue. But the whole picture together just paints an extraordinarily bullish setup for nuclear energy. The only fuel for nuclear is uranium. There's talk of plutonium and all of this. That's decades away if it's ever going to happen. Because people forget that you have to have commercial scale adoption of like a plutonium based reactor for that to affect the supply demand fundamentals of uranium. That's not happening. All the builds, those 150 reactors I talked about in China, as well as all around the world, are being built to run on uranium. So, in a sense, uranium is a very simple commodity in a way because it only has one use. When we consider something like copper, it gets super complex because how many things use copper, how to track the supply demand fundamentals of copper.
Mm.
Same with even silver to some extent because there's a big industrial component as well as monetary. How do you track that? Well, with uranium, it has one use going into nuclear reactors. There's other factors that complicate the market, like the pricing mechanisms, like the fact that you have to convert and enrich it and how that plays a role on the market. But it's just we need more nuclear fuel to fuel reactors being built worldwide, and one's already under operation and one's being extended. And there's just not enough of it.
Jesse, my final question, and I'll link this back into, investment ideas and that sphere of what we're talking about. So, in terms of, you mentioned earlier on with energy fuels, taking your starting position off the table and, letting it run and so forth. Now, with nuclear and with where we are with pricing mechanisms and supply and demand, which you've gone through, for your exit strategy, if you don't mind me asking, do you have a price point in mind, i.e., if uranium gets to X price point, I'm out, or do you? Again, what's running through your mind? Just want to try and help as many people out there if they're struggling with the same, exit strategy challenge in their head.
Yeah, I think that's one thing to separate between individual companies and the industry as a whole, because I always keep ETFs as my largest positions in all the commodities I invest in. So that would be gold, silver, oil and gas, and uranium. Those are kind of my three main ones. So I'm keeping my larger position in the case of uranium in the URNM ETF, which is a Sprott product that holds a basket of uranium miners, and it's more heavily weighted to the big producers, Kazatomprom, Cameco. Um, so that is going to be very different from an individual company because when it comes to individual companies, obviously you have to be following what they're doing. Are they delivering on the promises they made? Are they getting into production if they're not producing already? And looking at their PEA, PFS, FS, and figuring out, okay, does this look realistic? Is it going to happen in a reasonable timeline? I do think, in some sense, a rising tide lifts all boats. So I do certainly think we're going to see certain companies that don't have a chance of producing for a very long time, nonetheless get re-rated heavily to the upside, especially as more institutional flows come into the space, which I anticipate is going to happen more and more up ahead. But in terms of something like URNM, where I'm holding a basket of miners in the whole industry, I would be looking at an exit strategy that would definitely be laddered as opposed to just taking everything off the table at a time where I think, okay, this is it. Everything's overbought. It's gotten too crazy. So I'm just going to take everything off the table. I'm certainly not going to do that. I think that you have to be watching the industry, what's happening with the uranium mining space, how many institutional flows are coming in, how much is the retail crowd involved? Because right now it's so early that for those of us in the space, we're like, wow, it's going up so much, all this great stuff is happening. But if you go up to your average retail investor or even your average financial advisor and you start talking about uranium mining stocks, their eyes would glaze over and they'd be like, what are you even talking about? So we have to realize truly where we're at. If we enter a true mania phase, then I think I would be taking a larger percentage of something like URNM off the table if I saw that, like, wow, it's getting, we're seeing the retail crowd really enter into this trade. There's like a Wall Street uranium, which there actually is, but you go on there and it's like the same three people and the posts have like 2 likes or whatever, right? So okay, when that Reddit takes off and we're seeing like a Wall Street bet style event, then you're going to start to know, okay, this is maybe starting to get a little bit crazy. So it requires observing a number of factors and also understanding where the supply demand dynamics are at that point. If we see uranium rise to a price where we're incentivizing a bunch of new projects to come online, and those projects start to come online and they start to produce. It's the same story for any commodity in that when there is a lack of supply and years of underinvestment, as there has been with uranium, that initially prices will swing way too high to the upside when production comes back online. So at that point, once the price gets high enough, more production is able to come online. And so then that puts downward pressure on the prices. And that's kind of how the commodity cycle works. The thing that makes uranium a little different is like how that this is a question I'm always asking. Where is the uranium going to come from? Because there's just not enough projects on the horizon that even have the capability of producing in any sizable quantity to meet the demand that is already here and that is going to rise. So I think there's so many dynamics at play. It's very hard to say when X happens, I'm going to sell. I think it will require kind of an acute awareness of what's going on in the industry. But of course, if I see supply catching up with demand, I start to see the retail crowd get heavily involved. These types of things would be signals for me to consider taking some or all of my position off the table. Uh, Now, because if we look at the last major bull run, just go look at it on a chart. Uranium goes ballistic up to, I think, close to 160 a pound on the spot market and then collapses dramatically on the other side. So if you were holding on for too long, you got wiped out after making tremendous gains. So I'd rather be taking my money off the table in the middle of that parabolic move or even the beginning. I'm pretty reasonable in what I'm expecting. I'd love to get 10 baggers, but I'm happy with a 3 or a 5 bagger.
Mhm.
Um, I think it's better to be too early, obviously, than too late, right? That's true in life in general. But in this case, I would probably err on the side of caution, but still leave some on the table in the mania phase, maybe just in case it 10x's from there, because you never know. And then when it comes to individual companies, obviously it's a matter of watching them and their fundamentals, listening to their earning calls, reading their news releases, understanding and keeping up to date. I love Rick Rule's adage that you should own the number of stocks in your portfolio equal to hours each month that you're willing to spend researching them, right? Or understanding what they're doing. So I think that's a really good adage. It's something that I stick to. So in that case, it's about following the company because, like I said, with Global Atomic, if I wasn't really up to speed on what was happening with them, what was happening in Niger with the government, I would have thought, they're probably just going to go into production, and I would have lost much more money than I already did. So staying up to date, staying aware, being aware of the overall cycle and what's going on with the retail crowd, the supply demand fundamentals. There's no set formula. It's not easy to do. And everybody's going to make errors in some way or another. But if you can be approximately correct, it's better than being dramatically wrong.
Well, I think that's plenty of food for thought there, Jesse. I think that's a really good place to wrap up. I always like to give people the opportunity to say how you can be found. Of course, I will link to this on YouTube and in the Substack post as well. So if people want to follow yourself and your work, how do they get in touch?
Commodity Culture on YouTube, and you can follow me on X at Jesse B Day, where I post pretty regularly.
Fantastic. As mentioned, I will link to those in the show notes as well. Well, Jesse, I've certainly learned a lot. I think there's a lot of food for thought there for everyone as well. Thank you for your time and look forward to catching up again soon.
Thank you, Robert. Really appreciate it.